The agro space, where the cotton prices have eased slightly as China's strategic reserve started selling a portion of its massive stockpile, which is large enough to supply the world's largest textile industry with raw material for 1 year as per the reports. The selling also came as investors focused on the bearish world outlook in the US government's monthly crop report released on Friday. The world inventories by end of July will be at a record above 81 million bales there. Dhiren Sheth, President Cotton Association of India, now joins us on a Mumbai phone line with his take on the prices there. Mr. Sheth, hi, welcome to the show. How are you reading the prices and the huge stockpiles that the world could be staring at in 2013?
Yeah, well, we can't be very bullish after the figures that you have stated. The critical factor is China, also what you stated. They have decided to start releasing their strategic stocks, and they did auction of some cotton yesterday. The response was almost 50-60% of the quantity offered. And till they keep on offering cotton, prices cannot move up. The only rider here, Misha, is that their offering price is equal to 120 cents per pound or thereabouts, while the world prices are hovering around 85 to 90 cents per pound. That is the big rider there.
Mr. Sheth, also 2012 was a year when cotton prices underperformed, not in the global markets, not just there, but in Indian markets as well. What's your sense now as we enter into the new year, supply, demand, and the prices impact of that as well?
Oh, the United States will definitely see lower plantings because of the lower prices. The Indian farmer may not reduce planting so much. So India will continue to produce more or less the same quantity, but the world will produce lesser quantity, which will bring the price band a little bit higher than what it is now.
So from the current prices, what's your sense? How much of a further decline can we see, and what range are you working with?
We should not be able to see too much of a decline because of the minimum support price situation. I mean, if the prices fall by another 5%, we'll see minimum support prices getting activated in places like Maharashtra and Gujarat, while it's just being activated in Andhra Pradesh just now. So you can't be very bearish. At the same time, you cannot be very bullish because of the China factor. So the narrow band will prevail.
So just to give it a number, Mr. Sheth, would you say 5-7% or 10% of a range is what we could be working?
7% plus or minus, that's it. Nothing more than that.
All right, Mr. Sheth, I appreciate you taking time out for us. So around 7 to 8% of a move is what you could see in the cotton prices, at least in the near term. But there is absolutely no bullish news coming in for that space. Talk about other commodities then, and the sugar prices also continue to decline, especially today on profit taking after recovering nearly 1% in the previous 3 sessions and on higher supplies in the spot markets as well. Currently, the sugar prices are trading below manufacturing cost. The sugar mills are selling more despite a fall in the prices as cane crushing is going on in full scale across the country. Most traders feel that the sugar prices have bottomed out and are unlikely to fall further, though it may remain range bound for some more time to come. In pulses then, the Chana futures bounced back from a contract low hit early today on short covering, though the supplies from the new season crop and expectations of a higher output capped too much of gains. Arrivals from the new season crop have started from the parts of South India, and there's Chana on your screens, 1.5% of a decline today. In spices then, the turmeric futures declined due to high carry-forward stocks approaching fresh supplies and weak overseas demand. The pepper futures in the meanwhile saw a bit of a gain as lesser stocks and thin supplies in the domestic market amid winter demand supported the sentiment in the top producing states of Kerala. The Jeera futures also were trading higher on some fresh overseas inquiries, though the expectation of higher output after farmers expanded the area under cultivation and favourable weather restricted too much of an upside there. In the edible oil space then, the soybean futures extended gains for the third day to hit the highest level in more than a week, trailing global leads and limited supplies back home as well. Soy oil in the meanwhile reached its 1-month crest in the Indian markets. Shrikant, let's start with you, and what's your sense coming in for sugar prices now? The continuous decline that we see on every bit of a rally that it sees, how would you want to trade the prices?
What you saw happening a few days ago is just a bear market correction, and you're in the middle of the season and you're also at the wrong time of the year in terms of supply of sugar because your festive season is over and the soft drink market will kind of open up only after February or March. So normally the January to March is the time that you actually see declines in the sugar prices. It is selling below the cost of production, and even those mills with deep pockets may be able to sell in the next month and not sell today. The choice is between carrying cost and discounting the market price today and selling it. But then all the mills can't really do that, so because they also have a cash flow problem. That's the reason why you're finding the selling pressure coming in. I don't think you've seen the bottom of it as yet, because technically, if you look at it, I think it's got another 100 or 150 rupees on the downside to go. I would actually say that you probably, when it reaches 3100, or in 3050 is when you would say that it could have bottomed out and it might move up. That is on the price side. On the time frame, I think that maybe another month, by the end of February is when you may see it kind of consolidating, and then it might start moving up. But until then, I don't think you're going to see any good news coming in from sugar, and I think the mills are going to have a tough time for the next couple of months.
Well, clearly that seems to be the way, but one thing that has been holding firm has been the wheat prices throughout. Vijay, how do you look at trades there?
Manisha, I'm turning bullish on wheat, and I think the prices do seem to have fallen a little too sharply and a little too soon. So my guess is a pullback is on the cards, and over the next 6 to 9 months time frame, I think a retest of the previous highs at 1700 plus is in order. So I would want to look at February wheat, not the current month futures. February wheat is trading approximately 100 rupees below the Jan futures rate, and therefore the cost of carry is negative there. I would buy it at close to current market price, which is 1470. I would hold this with a liberal stop loss at 1450, and I would expect to book profits close to 1495. Even if this stop loss is activated and the prices do go lower, I would still attempt to buy at lower levels, and I think the downsides are fairly capped. The risk reward ratio seems to be on the long side.
All right, buying call coming in for wheat, but chana is something that has been declining continuously in last few sessions now. Srikanth, how would you want to trade that?
I think when you saw chana at 5,000 rupees, that was when the acreage had to increase in the next year. And if you look at arrivals now, you've got, I think, Karnataka and Andhra, which is already, the arrivals have taken place. Maharashtra should be happening anytime now, and then you have MP, which will be again now, arrivals will be starting somewhere in February. So I think chana is coming from all sides of the, all sides of wherever it is being cultivated, and that's going to add a lot of selling pressure. So it is bearish now, and even the 3,500 levels that we were looking at earlier on, thinking that that might be a little low, I don't think it's going to hold. And though you could trade it on the short side as far as the trade is concerned, I think chana by itself has got a long way to go on the downside. And I wouldn't be surprised if you even see 3,000 levels in the near future.
All right. So two sell calls in sugar and chana, but a buy call coming in for wheat in the agro space there.